Hey everyone, it's live stream Tuesday, and welcome to another what I think is going to be a phenomenal edition of Live Stream Tuesday. And yeah, be prepared because I think we're going to have some pushback on the stock that I'm going to tell you about. But also want to say that I am picking up my newly wrapped Elsa Cybertruck today, wrapped in ice blue. And so I'm going to try and make this quick because they told me to come at 1, but they told me after I set up my live stream. So I was like, well, I can't come at 1. So we're going to do this, and then I'm going to head off and go up to pick up Elsa. And I'm so stoked, so excited to see what my new wrapped Cybertruck is going to look like. But that's neither here nor there, because first, we've got some business to do here. Because listen, folks, yeah, when I tell you what this stock is, you're going to be like, Paul, no, 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 no. Look at this. We can't, no. But I'm telling you, look at the stocks that are ripping higher. And remember, I mean, when was it that I think it was about a year ago? And I said, Carvana, comeback stock of the year. And people told me, too much debt. This is a crappy company. They got those stupid things that like we can see, that's all dumb. And yeah, it's up from that video. I think it's up like 1,000%. So this one I think is another potential Carvana. I'm gonna like lay out why. And it's a stock, and it's probably a stock you probably hate. I was gonna put it out right front. But before I get into all of that, let's just do all the legal stuff, which is that this live stream and the content from ATG Digital Media is not investment or financial advice. Is presented to you as opinion, information, engagement, and entertainment. Next, all ATG Digital content may contain errors, oversights, and mistakes. We are human beings. We do our best, but there are no guarantees. Understand that investment operations have significant risks. What are investment operations? Buying or selling a stock, options, crypto. Yeah, buying or selling anything, you can lose your money, so can lead to the loss of your principal. Next, I, the owners, employees, contractors, own, trade, transact in the securities that are mentioned in this video and all the content from ATG Digital Media. We do not take money from companies or crypto to recommend crypto promoters or sponsors to recommend their stocks or crypto tokens. Apparently, this is a thing. This is all of the free stuff that we put out. Man, we put out a lot of content. I mean, we have a small little 8-man team here at ATG Digital, including me, 8-person team. Yeah, I mean, the Substack is published daily. Ballman Speculating podcast about 2 or 3 times a month. YouTube, I'm on. We're actually initiating a monthly Facebook live session. So if you're following me on Facebook, I think once a month, I'm going to go and do a Facebook live session, update folks about our investments, our strategy, what's going on, and take questions from folks. And if you want to be a paid subscriber, go to atgdigital.media. Subscriptions begin at $9.99 per month. I think I need to hide this. All right, but let's get to the business at hand. One thing is very clear, even from the string of YouTube live stream picks, if you will, which is that the win, which was was a headwind for pretty much 3 years, is now slowly starting to become a tailwind. And we can see this by the fact that, yeah, stocks are turning around, they're being bid up higher. When they get sold down, people are coming and bidding them back up. And that is a trend shift and a trend change. And in hindsight, people are going to be like, well, what was it that changed? And before I get into today's pick, I just want to say, like, in my opinion, in my judgment, what's changed is really when the inflation numbers were released for last month. You saw a shift in what was being traded, how it was being traded, and how aggressively it was either being short covered or being bid up. And that suggests I've laid out to folks that I believe we are going to go from a transition from a focus on very large stocks like the NVIDIAs and Microsofts of the world that have dominated markets for 3.5 years approximately, to a market of stocks approach. In other words, a lot of different stocks are going to start to perform and do better. And these are tiny compared to the very large stocks. So it doesn't take a lot of money. And that market is underway. And we can see it in just so many different stocks. Just more recently, like if you look at the live stream picks over the last month and a half, Mankind, Idea, Biosciences. All of these stocks are getting bid up. Why? Because there is an interest there. The market is focusing on smaller stocks, looking for new ideas to kind of like take their gains and to push into it. So this is an incredible environment for our strategy, our investments, our way of doing things. So atgdigital.media, we have 3 stock picking portfolios: silver, gold, and diamond. Silver is sort of like a multi-cap. Gold is sort of like mid-ish to high small, and then diamond is the smallest ones. So go check those out. All right, to the business at hand here. Okay, so I want to keep the stock a surprise, but I really can't, because the basis of recommending this stock is how poorly it has done over the last 3 years. When I show you how poorly, you're going to say, okay, I'm going to shut the YouTube down and I'm going to go away. This guy's crazy. He's an idiot. He's a fool. And hey, that's all fine. I'm good with being ratioed by all those folks, and that's all fine. But nonetheless, we have to get into the idea that selling at low prices and buying at high prices is not the way to make big money. And if you're wrong at getting in at a high price, and if the underlying business, the underlying technology, the underlying theme, the underlying nature of it is still good, and you made a mistake on price, the evidence is very, very clear that what you want to do is keep tracking and say, hey, was I simply wrong about like where I got in, or was I just completely wrong about the idea? And so with this particular stock, clearly in hindsight, I can say now and put my hands up and say guilty as charged, that I clearly when I recommend the stock originally, it clearly was at a high price, and it has been utterly, completely destroyed. Completely destroyed. Now, you can see that as a terrible thing, or if you, like me, are looking at it as a business, as a technological shift, as a product, as a service, and say, yeah, okay, I clearly got that timing wrong. But nonetheless, is there a real company here? Is there a real business here? Is there a real technology here? And then most importantly, at the low price, which is like, yeah, at this low price, would you be a buyer or would you be a seller? Would you go with your mood? Would you go with your psychology of like, oh my God, low prices, let me sell? Or would you go like, okay, so these stocks represent companies, they represent assets, they represent future sales, future earnings, future cash flows. Should I use my logic brain, or should I use my, oh my God, I'm so afraid at low prices, let me sell everything, and not think about, who am I selling to? Why would they be buying at this low price? Maybe a little thought interrupt, maybe a little mindset shift, and think, okay, do I want to compound what was a mistake by shedding this thing, getting rid of it? Why? Because it makes me feel better. I got it out. Oh my God, the pain of seeing this incredible loss. Well, hey, I will, like I said, mea culpa. on this stock. I was incredibly bullish several years ago, and initially we did very, very well, right? I mean, and then they did this merger, and then the price got bid up in that frenzy in 2021, and then it crashed. Some of you will have guessed what this stock is. It was a Cathie Wood ARC Innovation darling. And in fact, it turns out that she's one of the reasons why this has gotten, I mean, this is a stock that was at 300 and it's now at 10. 300 and now at 10. And it turns out that one of the reasons why it's back to 10 is because, well, Cathie Wood and ARC Innovation was bidding it higher and continued to buy it on the way down. And about a month ago, and you can actually see this on the chart, so you'll get a little bit of like how I look at things. I'm going to show you the chart, and you can literally point to. Now, I mean, I can't like guarantee that that's Cathie right there, but given the size of her position at the time, given how popular she is and how well followed she is, it's pretty clear. Like the moment when they worked out that she was selling and selling out. I mean, she has sold out this entire position. Yeah, as I was telling my team member, Dan, I said, once the market worked that out, yeah, I mean, they just destroyed the stock by essentially, they're like, we are going to short this and we are going to send this down and you will sell us, Cathie, your stock at ever cheaper prices. No prizes for guessing what stock it is, but I'm about to share it. It's Teladoc. It's Teladoc. Yep, you're having the reaction. No, 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 Paul. Not this awful dog. Not this awful, terrible dog. No, no, no. Yes, 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 yes. Okay, let's do a tiny bit of Mampilli style chart analysis, not technical analysis. All right. Okay. So can you guess where it is that the market figured out that Cathie, who is like lightening up, kind of took the first, like, okay, I want to be out. Here's a bunch of stock. Yeah, is it that like place where it suddenly drops from 21 to 14 right in the middle of your screen there? Yeah, that's called a gap down, right? And a gap down is essentially what? Well, from being in the money management business, this is what's going on at a gap down. In other words, stock's trading for 21 one day. Suddenly you wake up the next day, it's at 14. What happened here? Well, what happened here is that a large manager like Cathie Wood, somebody else, wants to get out of a large position all at once. Instead of like selling out a little bit every day, every week, every month, they want all at once. They want cash. Maybe they're facing redemption pressure. Maybe they've changed their mind. Maybe whatever. Maybe the analyst that used to cover it has gone to another company, and the portfolio manager no longer has an understanding or feel for that. Whatever it is, they want their money and they want it now. And what happens is that you make a deal. No different than any other markets. You call around, you say, hey, I've got 30 million shares of Teladoc. Can you get me a bid? And of course, if you want your money like that in any market, what happens? The price plummets. They're like, yeah, I'll take it, but I'll take it for 20 or 30% lower. And then, of course, you decide, well, okay, you're going to clear the whole thing out, which is what I understand happened at ARC Innovation, which is that they have completely sold out of their Teladoc position. And remember, they owned at some point 5% of this company, 6% of this company. It was not a small position. It was a large, large position. So, of course, they continue to sell after getting clearly a large part of their position out. They continue to sell. And from X, previously Twitter, I understand that this selling is now pretty much done. And you want to see what this looks like on a 5-year basis. That's Teladoc, 5 years, $308 at the peak in 2021 in the COVID. In hindsight, people call it a bubble. I'll call it a frenzy. Some people call it a mania, whatever it was, $308. And now the low, if I'm right, is set at $8.73. Today, it's trading for a little bit under $10. So a small little bounce happening today. Small little bounce happening today. And before I go further, I have to credit one of my ex-followers who actually put this idea into my head. And he wrote me and he said, does Teladoc have a chance to be the next Carvana? And you know what? As you can see, I responded to him and I said, yeah, but it lacks the debt and the hate fueling the short position that makes Carvana go. But you know what? I went and did more work on it. And I thought about, you know what? He's right. It does have the chance to be the next Carvana. And let's look at what Carvana has done. Carvana, no different than Teladoc. I mean, was pretty hated. I'm going to put this. This is Carvana stock. Yeah, it goes from 3 to 145 today. So what? 30 times, 40 times your money. And what drove it? What drove it? Well, there was clearly very large number of sellers selling from 376 all the way down to $3.55. If you went online on social media, you listened to Wall Street, they're like terrible, terrible, terrible. Oh, they have debt. They've got those useless vending machines. You could the stuff that people would say, was all there. Still, I made the argument in my video where I called it the comeback stock of 2023. I made the argument that they still had the only scaled up auto car distribution that was completely online other than Tesla. There's nobody else that can actually deliver cars to you at scale other than Carvana, and there's Tesla. And I said that platform is very valuable. There's no other purely 100% dedicated online car selling platform. And they just have, I think, like a 1 or 2% market share. So when you have a lot of skepticism, when you have a lot of hate, but you have a valid technology, product, service, platform, yeah, you can have extraordinary turnarounds like this. Obviously, when I called it my turnaround stock, I was mocked. I was told I was a fool. I was an idiot and dumb. Hey, people can say whatever they want, but nonetheless, anyone that followed that trade, yeah, they're pretty happy today. So if you want to dismiss Teladoc, you can, but I'm going to lay out why, in my judgment, with the market going in our direction, whether it be Tesla, whether it be, a lot of small names where they're off their lows, clearly there are buyers coming to bid them up. The macro environment suggests that, we're going to have lower growth, which means growth stocks will be trading at a premium at some point in time, the next 6 to 12 months. Yeah, and there are like actual things, but you can actually tangibly point to that say that, in my judgment, in my opinion, a turnaround is coming. But let's go in a little bit more into Teladoc and break this down. This is a company, right? This is a company that at the peak, their market capitalization was $44 billion, $44 billion. And now it sits at 1.664 billion. Yeah, this is a fall from grace. Some people might call it a disgrace, right? A definite fall from grace. Now, what really drove this decline? What really drove this decline? Many people say, well, Paul, their business collapsed. Actually, not true. Their business didn't collapse. How can we tell? Well, if I look at the financials and you can see, this is their annual numbers. Their business hasn't collapsed. They actually have more revenue than they did last year or the year before. Their business hasn't collapsed. So what really changed? What really changed? Well, I am going to show you what really changed. You see, what really changed is this. This is the price to sales ratio. What is that? What is this price to sales ratio and why does that matter? Price to sales ratio essentially measures our mood, measures our mindset, measures our feeling, measures our emotions, and it's driven very much by the stock price. The higher the stock price, the higher our emotion. The higher the stock price, the more we want to own of this. And we will bid something higher, essentially taking the same dollar of sales and saying, I will pay 2 times sales, I'll pay 3 times sales, I'll pay 4. And you can see at the peak here, yeah, people were willing to pay 25 times sales for every dollar of revenue or sales that Teladoc generated. And today we are at less than 1. And that is the reason for the collapse in Teladoc price. Now, some people say, well, Paul, it's completely justified. Well, their growth went from, 30% to 2 to 3%. Yeah, but for like a decline from 308 to 10, yeah, I mean, the company has $1 billion in cash. They have $2.3 billion worth of revenue. They are cash flow positive. Yes, they have debt, but the debt, some of the debt matures in 2025, but they have money to pay that off. The other debt matures in 2027. They have options if they wanted to. They can obviously cut expenses and increase the profitability. They could sell off some assets. They could, do an offering and pay for it. It's not like this debt is going to make this company bankrupt. But certainly the market is acting like this company, this technology, this product and service is dead, done, and dusted off. But the market doesn't always know everything. Right? Why am I showing you this? Okay, because I'm about to show you why some of these things, a little technical, but bear with me, right? I believe in sharing knowledge. I believe in increasing your understanding of how things actually work versus the crap that you get in a lot of social media and definitely in sort of like old school legacy financial media. So this is on a year-to-date basis, and Teladoc stock obviously down 54%. That's the first line, negative 53.88. That's the stock price. Then the orange line is they take all the Wall Street forecasts and estimates, and they're like, well, how much, based on these estimates, is the revenue going to grow for their fiscal year? Some companies have fiscal years that are, end in December. Teladoc clearly has one in July. So we're looking at July 10, 2024, which essentially is just passed. They're going to report soon where they, per the estimate, will have shown a small decline. And then for next year, which should be 2025, July of 2025, currently all the estimates say, it's going to decline by 6%. And then you'll see that green line, yeah, it tracks the stock price, which is in purple almost perfectly. And that's the price to sales ratio and how much it's gone down. And you can see that as these forecasts have gone down, people's confidence, people's desire, people's appetite to own this has just been crushed, crushed, crushed. But if you are tracking the news carefully and you understand what drives Teladoc's business, you would be like, it's got $1 billion in cash, got $2.3 billion worth of sales. They're operating cash flow positive, they're profitable, and they haven't really given up a lot of the revenue growth that they got as a result of COVID when everybody was online. So what's going on that can, in my opinion, turn this around? Well, you see, the healthcare business is an extraordinarily regulated business. A lot of the money in healthcare goes through big government gates, right? Medicare, Medicaid, and then whatever these programs do is mirrored and copied by all the big health insurance companies, Cigna, Aetna, whoever you deal with. They just kind of like, they look to see what Medicare is doing, what Medicaid is doing, and they essentially, they have to copy that and they have to provide that. And one of the things that is happening and is going to be happening for 2025 is that Medicare, and CMS is, by the way, the organization that controls Medicare and Medicaid. Well, it turns out that they are planning to expand their reimbursement for various digital services. What is Teladoc in again? Oh, yeah, that telemedicine thing, right? Yeah. Digital health. Yeah. I mean, is there another company that you can think of that like is solely focused on digital health? I really can't. I wonder if they might benefit from this rule. And if you read this article, it says very clearly, they are planning to increase the number of payments for an assortment of digital health services, digital therapeutics, telehealth, audio-only telehealth. And then there's also proposals for rural health clinics. Essentially, there is like a plan to increase the availability, the access to telehealth, telemedicine from CMS, which controls what happens with Medicare, what happens with Medicaid, and which is then copied by all the insurance companies. I wonder why that's not in the forecast yet. Well, I mean, because what's the date of this article? This article is July 11th. I mean, it's 5 days old. I mean, so obviously, it's not yet there in the estimates, but look, I mean, the big hedge funds, the big asset management companies, the really good ones, you think they know about this? Yeah, I think they know about this. Yeah. You think that they're like, okay, hey, whoever is tasked to be the Excel spreadsheet jockey is like, hey, work out what the impact is going to be on telemedicine, on telehealth as an industry of these changes. And then tell us which companies will benefit the most. So they go on their computer, go, oh, yeah, well, doesn't look like it, but like, I think Teladoc would actually benefit a lot from this. Oh, okay. By how much? Well, then they, be like, okay, well, they haven't grown in the last 5 to 6. I mean, they've been, they don't have big growth estimates, but I'm thinking even on the low side. And this is again, I'm sticking my finger in the air and coming up with the estimate, but I would say on the low side, I'll say 10 to 12%. On the high side, I'd say 30%. And with such a smash stock, with such smashed expectations, with people expecting nothing. When I was laying this out to Dan, he was like, you don't even need good news to move this stock. Less bad news would be good. Actual good news, actual growth would shock the market. It would stun the market and it would bring people in. So the usual things that drive stocks higher, which is what? Well, short covering, because of course there's a short position. I think it's like 15 to 20%. It's not extraordinarily large, but it's big enough. It's Carvana sized large. There's a level of hate here. Why? Because, well, people hate Cathie Wood. A stock that goes from 308 to 10, of course there's hate. There's a lot of people that lost a lot of money and probably sold somewhere near the low. You don't get lows because people are buying. You get lows because everybody's selling. You get lows because at the lows, there's only two sets of people that I can think of that are buying. Market makers, why? Well, that's their job. And also they are in the business of accumulating a valuable property at very low prices that they can mark up and sell for profits. Yeah, I mean, that's their business. And there's maybe dumb people, but true believers like me that are like, yeah, there's something here. We used to own Teladoc when it was just, Teladoc itself. Then they bought this company called Livongo to integrate AI, and they paid $18 billion for it. Clearly, they bought it at the top. It was, they overpaid for the acquisition. Still, you still have to keep your thinking grounded in evidence, in facts, in research, rather than in your emotion. And so, whatever it was in the past, I'll let that go and be like, it's now a $9, $10 stock. From here, what can it do? What can it do? From here, in my judgment, I mean, they got 2.3 billion. They are the predominant telehealth company. They have, 50 million, 60 million subscribers. You expand the access to lots of different fields. You expand the access in terms of regions that can participate. Remember, at the bottom, a telehealth company is not that different from Facebook, not that different from Google, really not that different from any company that essentially has a very large computer, and those are fixed costs. And the more volume that goes through it, eventually the cost is paid for, and now pretty much all the money that goes into that business drops down to the bottom line as profit. So I understand how this business is constructed. They have the largest network of doctors. They have the largest network of patients. All the biggest market winners in history really have this network effect. Why are the patients going to be at Teladoc? Because all the doctors are there. Why are all the doctors going to be at Teladoc? Because all the patients are there. You see, that's the network circular effect. So you got all these things going, and then, but there's more. So it turns out there's also a piece of legislation, which is separate, by the way, from CMS. That is the organization that determines reimbursement rates, determines what they will reimburse for. But Congress sets their agenda. They can only do, things within the construction of various laws. And it turns out that this very important subcommittee in Congress has actually a piece of legislation that is set to also expand telehealth access. So, yeah, I mean, this article is as of May 15th, but maybe you can be skeptical, and that's fine. But the thing is that at $10, the market's priced in everything you're likely skeptical about. Paul, this will never turn around. Yeah, it's priced in. Paul, they have $1.3 billion at debt. Yeah, it's priced in. Paul, they have a track record of not growing the last 3 years. That's priced in. What's not priced in? Any turnaround, any growth, any market expansion, any new adoption, not priced in. So you put this all together. Yeah, could we see something like this happen with Teladoc? You just change the name from Carvana to Teladoc, where it goes from 10 to 100, maybe even higher. Because I mean, the used car business is a good business, but we're talking about health, right? I mean, health is a universal business. I mean, it's what, 10, 20, 30 times larger than Carvana. So, I like to say, when the odds are good, I like to make the bet. Most people don't think like that. Most people say, show me a rising price and I'll buy. I like to base my decisions based on, like, hey, look, you've got all these things that are bad, but that's priced in. How do you know it's priced in? Well, look at the shape of that chart. And then you point to all these things that are good and you go, well, that's not priced in. How do you know? Look at the shape of the chart. So you put those things together. That is how you buy at very low prices to make big, big, big money. So that's the live stream topic for today, which is Teladoc. Teladoc, for those who are not subscribers of ATG Digital, is in our silver tier. That is our introductory tier. Goes for $9.99 a month. We have owned this from my Banyan Hill days. Nonetheless, it's obviously a position in which we have a large loss from the original place where we put it in, but it doesn't change, the opportunity. I mean, I saw a post saying that Amazon, went through something similar. I mean, Amazon traded for the equivalent pre-splits are $400 in 1999, went down to 10. And even if you bought it at $400, over time, those folks make 20 to 25 times your money. But if you bought it at the bottom at 10, you made 2,000 something times your money. Is Teladoc the next setup like that? Well, you don't know for sure. There are no guarantees. But if you want to make really big money, you got to go in at low prices. You got to look at facts. You got to look at evidence. You got to look at research. Not focus on the emotion. Not focus on the past. All right. I will stop there and take any comments or questions about anything. Here we got Rashad, who's a regular live stream attendee. Rashad, happy to have you on the live stream. I will have to see if I can do it. I don't think I can do it on YouTube, but I could do it on X, and or I could record some of it. So I'm going to maybe record some of it, but I'm going by myself because my son is working. He's a lifeguard, so he's not there with me, and I'm not sure I can find somebody to go with me. And the rest of our team, as you know, a lot of our team is in Baltimore, then we've got some folks in Florida. So I'll have to work out how to get video coverage for this, but thank you. Lucy says, what price do you see Robinhood hitting? Well, it depends on what time frame. I mean, today, this week, next month, over the next 3 years. I mean, if I'm right about Robinhood, which is that no different than Carvana, no different than so many businesses that are going online, they have the only true, completely native digital platform for buying and selling stocks and crypto. Remember, I didn't say the only digital platform, the natively digital. And you can see this by if you go and use the Robinhood app and go and try any other app from E-Trade, from Schwab, from I think TD's app is okay. But they're all some version of okay to bad, or in some cases just terrible. So Robinhood, if I am right, I mean, they've got a number of things going for it, which is that their business is structured digitally, so they're more profitable. They're also the only broker that gives you access to crypto. So there's an entire group of investors. If you don't offer them crypto, they're not interested. So they're going to be the dominant brokerage company in the country and potentially in many parts of the world over the next 7 to 10 years. Yeah, this could be, I don't know, a $600 billion company, a $700 billion company. What are they valued at today? I mean, I'm just looking it up. Yeah, this is a $21 billion company. So depends on the time frame. Depends on the time frame. In 1 year, with Bitcoin prices rising, with crypto prices rising, with our stocks, which remember a lot of like Robinhood users are a bit younger. They focus on much more speculative stocks. They focus on growth stocks. As our stocks start to lift up, more people will come to join Robinhood to participate. So their volumes go up, their revenues go up, their stock price goes up. I'm bullish on all time frames. Nothing's ever a straight line, but this, in my judgment, is the dominant platform, digital platform for trading of stocks and crypto. If you're looking out 3, 5, 7, 10 years, they will long-term destroy Schwab and all of these others in this business. Atheist63 says, I'm all in on Teladoc and says, thank you. Well, good to hear. Sarah says, Paul, excellent read. Back in on Teladoc. 3D Systems and made a small Canadian fortune on Core Scientific, which went bankrupt and is still coming out of bankruptcy. Atheist says, talk about Tezos. There's nothing much yet to talk about. Tezos, the scenario I've laid out for Tezos is that it is the only blockchain. It is one of the blockchains that has an express purpose, has an express set of users that actually are building their economic and financial lives around this blockchain. And that is digital graphic artists. So the largest volume on Tezos is the trading of digital art, NFTs, but unlike the NFTs that go for $10,000 or $20,000, I mean, the average NFT that sells on Tezos marketplaces, they go for like $1. I mean, I own a few hundred of these. I mean, because they're beautiful. They're just like really nice. It's like buying art. It doesn't cost a lot of money, but there's a lot of volume. And there are artists around the world that are making money, in some cases earning livelihoods using Tezos related NFT marketplaces. And what they do is that they earn money in Tezos, then they take some of that money and they support other artists, which then obviously expands the ecosystem out to more and more artists who participate. They then also are, as a result of needing to mint NFTs on these Tezos marketplaces like OBJKT, Object, objkt.com. You can go check those out. That's where I've bought a lot of my Tezos NFTs. You got to keep some Tezos to be able to mint NFTs, to obviously buy other artists' NFTs. So there's now a storage and an accumulation of Tezos that is going on with more and more and more people, which then obviously drives more purchases, more minting. So you've got an ecosystem being built where people are building their careers, financial lives, economics around a blockchain. And that is the kind of organic activity that is lacking, certainly in the vast majority of blockchains, where the focus is very much on the price of the token. In here, you can see, like, I've not mentioned the price of the token. Instead, I'm talking about a real, actual, real world use for a community, for a group that has found a use for the blockchain that is valuable to them, useful to them, and they are using it in increasing amounts. And as other artists see an artist making money in Tezos, they come themselves and start to do it. So you've then got this, the layer cake effect, right? I mean, every large successful investment drives off this, which is you got a base layer of early adopters that come as they see success. They obviously increase their position. Other people seeing their success start positioning themselves, then those people raise their position. Over time, you just have layers and layers of accumulation, spending, buying, selling. And over time, at some point, the demand and supply balance inflects, where you just start to see very large price jumps because the layer starts to build maybe to the seventh layer. And now there's so many people buying, so many people accumulating, so many people transacting that the price just shoots up. That's the scenario and the thesis that I've laid out for Tezos. Obviously, it's a token that has struggled in the last 3 months. I had a kind of like a big shoot up to $1, went back to I think 60 cents. But the underlying thesis hasn't changed, which is that the artists really haven't gravitated to any other blockchain. They continue to do what they're doing. The ecosystem is going out wide. Steve says, I was thinking about lowly T-Doc last week, was considering adding to my position, and now I just did. Thanks to your analysis. You're welcome, and good job. Antonio's House of Pizza says, Paul, we always appreciate your insight. What is my prediction in Roblox? Roblox is in a better position than Teladoc. I mean, I don't think Kathy's dumped the stock out completely, but it could happen. And that like when there is a seller that has disclosed their intention, what is an intention? I'm going to sell. And they disclose their position. In other words, I have this much to sell. There's only one way that the price is going to happen. Why? Because markets incorporate information, right? So we saw that with the German government and Bitcoin. We saw it with Teladoc. Thankfully, with Roblox, there's no sign of it. They continue to have growth. They continue to have a large number of very young users. The scenario here is the same, which is that they've got an extraordinary percent of Roblox users are under 25. As they grow up, as they have money, have savings, we know from all kinds of video games that people continue to play these games and they spend even more money. So you've got a certain segment of Roblox users that are very active. They spend more money. There's more people coming in. Again, the business is growing through subscriptions. Each user spends a bunch of money. The underlying thesis for Roblox is that, and nothing's changed. They continue to be there. It's just that the desire for the stock, as some of the growth rates moderated, the price to sales ratio, no different than Teladoc, also crashed. But if I'm right, we've seen this transition moment, because of people starting to anticipate lower growth, lower inflation, and somewhere out probably, I'd say January, February, lower interest rates. That'll drive demand for growth stocks. And with that, you'll see Roblox stock shoot higher, in my judgment. Innocent Bystander says, Paul, longtime Banyan Hill subscriber and still am, but simply hasn't felt the same since you left. Just come around to you on YouTube. And let me tell you, it's refreshing to hear you again. Grateful for your comments. Thank you, sir. And Steve says, I concur. Thank you, Steve. More comments on things. Bill says, what's the stock? I have only just come. The stock was Teladoc. You'll have to rewind to the part of the show because I went on and on about it. I clearly am into Teladoc, and I do own Teladoc and actually bought some options. And we also put an options trade in Platinum options tier at ATG Digital. Antonio wants to know what I think of Enphase. I believe that the new energy stocks have bottomed out, and we are setting up for a huge run in these stocks. We can see it by the kind of trading happening in Solar Edge, in Sunrun, in stocks of this group of this industry tend to run together. And in some ways, Tesla is a leader. And if you think back, why did Tesla start shooting up? Because of its energy business, What is Tesla's energy business? Well, it's not that different than the business that Enphase is in. So if Tesla is seeing good numbers, what's going to happen the next time Enphase, Solar Edge, and all these companies report? While the last quarter may not be good, what will they say? Well, we're starting to see things look better. And so then, you've got the potential for these stocks to rocket higher. Tony wants to know if I am still bullish on STEM. We still own STEM in the silver tier portfolio. And yes, I still like it. Obviously, the stock not that different than Teladoc has gotten crushed. Obviously their price to sales ratio, their multiple has gotten destroyed. They've seen lesser growth, but nonetheless, bad news, mostly incorporated in the stock in my judgment. Good news, not incorporated. That's true for many, many companies in the growth sector. Still bullish on STEM. Steve is providing some instruction to Builder. Yes, I mean, this live stream, once we are done, will show up in the live folder under my channel, so you can check it out. Alternately, you can also, I also did a purple tier, which is our most expensive tier, $99 a month. Special report for those subscribers on Teladoc, and I have a bunch more that I'm planning to do. I mean, with purple tier is like where I sort of try to highlight and sort of like put together baskets of opportunities across the tiers. So if you're a purple tier member, you can look out for that. And it seems like there's no more questions, which means I can go and grab Elsa and see her in all her glory. So I will try and take some video. You can also follow me on X. I can try to live stream, but I think it's difficult with the bandwidth to live stream using the phone. But I will take some video, or at the very least some pictures. So follow me on X or on Instagram and or Facebook or Substack, and we will get pictures, maybe video out to all of you. And also check out Teladoc and come back next week for Live Stream Tuesday. Thank you all for coming. This is Paul saying thank you and goodbye.